Beijing in a bind. President Trump last night talking tough on trade, promising to rebuild the United States after years of unfair trade practices. Watch this.
We've taken the toughest ever actions in response to China's abusive trade practices. And we're doing very well with China, very well. And I have a lot of respect for China. And I have tremendous respect for President Xi of China. But this has been too many years of abuse. $500 billion a year. $500 billion.
This comes as some of the administration advisors are urging the president to impose a 25% tariff on $200 billion worth of Chinese goods, a significant boost from the original 10% proposal in a bid to pressure Beijing into a compromise. China's top leaders now pledging to keep their economy intact, aimed at what they deemed new challenges as the president's tariffs start to bite. Joining me right now is the CEO of Nestle USA, Steve Presley. Steve, good to see you. Thanks so much for joining us this morning.
Good morning, Maria. Thanks for having me.
Give us your status check as Nestle, obviously a European company. You're overseeing what has been an expansion in the U.S. But have you felt the pressure of these escalating tariffs?
You know, look, for us at Nestle, we believe open trade is the right thing for consumers. And so long term, that's what we believe. And for us, obviously, it's better for the consumers long term if we can find good trade balance between the markets.
So when the president was with the EU Commissioner, Mr. Juncker, last week, they said that they were moving toward no tariffs, no subsidies on both Europe and the U.S. Give us a practical understanding of what that means for Nestle and what that would mean in terms of what your price is for your goods, whether it's coffee or chocolate or anything else.
Well, it's good you asked that. I think for us, the reality is, in the U.S., the majority of our business is manufactured in this country for U.S. consumers every day. We have over 50,000 employees in the country and over 50 factories. And so for us, it has less impact to our business in Nestle U.S. than it does for some of our other competitors.
So if we were to see no tariffs, then you would be exactly where you are today. Is that right?
Materially, yes.
Even though there are tariffs right now in place on the European side.
There are. So I'm speaking specifically for the U.S. business, we'd be in the same place today. The majority of our products, the vast majority of our products are manufactured in the U.S. for U.S. consumers.
The Trump administration is implementing a sweeping overhaul of U.S. taxes. Obviously, he did that earlier this year with the positive impact on large corporations. The tax bill reduced the corporate tax rate from 35% all the way down to 21%, changed the way government taxes companies that will operate internationally as well, like Nestle, operating more than 400 factories across 85 countries. Tell us about the impact on your business. The administration is now talking about a second tax package intended to build on the cuts. What would be the impact?
Well, we think tax reform was a good move by the administration. Overall, it makes the U.S. a more attractive place to invest. You mentioned our recent expansion with our Starbucks deal, and we continue to look to invest in the U.S. It's our largest market globally, and tax reform helps make this a more attractive market.
Yeah, tell us about the Starbucks deal. When will that be implemented? When does that get executed?
Yeah, we're very excited about the Starbucks deal. We expect to close by the end of August on the deal. And really, for us, it's about building an incredibly strong coffee portfolio that we think is a leverageable platform for years to come in coffee. We're the leader in North America now in the largest coffee market. It's aligned with our global pillar, which is coffee. And we're really excited about bringing just a brand that has meant coffee in the U.S. and pair it with our other really strong brands on coffee in the U.S. between Nespresso, Nescafe, some other businesses we brought to the portfolio, and Chameleon and Blue Bottle. So we think collectively we've just got a great portfolio of coffee to go and win in that market.
Tell us about business right now. What would you say the demand picture looks like in the U.S. today?
I'd say the demand picture is good. The improving health of the consumer and the economy is good for our industry, right? So food and beverage, the categories are up for the first time in a while. We've seen relatively flat to stable categories for the last few years. And as the consumers get healthier and job numbers get better, then the food and beverage category gets better. So overall, the outlook's pretty bright.
Are you expecting to raise prices?
Yeah, great question. I think for us, the first thing we focus on is making sure we really look at removing whatever inefficiencies we've had in the business and try not to make sure we pass any of those on to consumers. We're so consumer focused at delivering great value for our products for them every day that that's our first step. The reality is the industry hasn't had inflation for the last 5 years. It's been relatively stable. And so I think some form of pricing will return to the market. I do think it's good for us. It's good for our customers. And the healthy economy and the healthy consumer helps make that possible.
And is it fair to say that if you were to see higher retaliatory tariffs once you sell out to Europe? I know it's produced in the U.S. and it's largely for U.S. consumption. But if you were to see tariffs, does that push you even further to raise prices? Would you be poised to raise prices should you have the tariffs to deal with?
Yeah, I'll go back to we believe that open trade is the right answer, kind of period. And so I think that's the best long-term hope is that we can get to open trade.
Tell us about jobs, bringing jobs back to America. Yesterday, you celebrated the grand opening of your new U.S. headquarters in Virginia. Pretty significant milestone in the 152-year history of the company. But even as established as Nestle is, you've continued to adapt to future demands through innovation. Tell us about the new plant.
Yeah, absolutely. I think more than just announcing an opening of the new headquarters here in Virginia, it's about, relocations are a great catalyst that we can inject into the business to transform it in a huge way. And it's been a great lever for us moving across country, resetting the expectation, resetting the culture, and driving this culture of innovation in the market. And we're really excited about the opportunity with that. We've had a great partnership with the state of Virginia and the local development here, and we're looking forward to what being on the East Coast will bring for us. The reality is for us, 80% of the consumers, 80% of our customers are on this part of the country, so it brings us closer to our consumers and our customers, which I think makes us better for the future.
So are there new jobs that you'll be bringing here as a result of this new plant?
Absolutely. We continue to grow in the U.S., and so we'll have almost 2,000 employees in the state of Virginia between our corporate headquarters and our two factories, and so there'll be new jobs, absolutely, as we continue to look to grow our business in the U.S.
All right, we'll leave it there. Steve, we'll be watching. Thanks so much.
Thank you so much, Maria.
Steve Presley is the CEO of Nestle.